Stablecoin volumes are booming. There's a ton of transactions happening on stablecoins. I think just this morning I saw the news that stablecoins have overtaken ACH in dollar transacted volume. The industry is very hot. There's a ton of companies in the space, ranging from the giants like Stripe to the crypto natives like Tether, and a ton of other companies in the space who are trying to make things easier and faster for the end consumer. Raj, why does the world need yet another stablecoin company? What are you guys doing?
I think, first of all, stablecoins are just about starting. So we're just scratching at the surface of what is possible because compared to traditional payments, stablecoins do much little volumes. And the numbers that we talk about are also on-chain stablecoin to stablecoin, which is not really where big difference happens in people's lives. So I think it's just about starting. And the space is just opening up in real world payment transactions. In this space also, companies which are focused on solving cross-border payments for emerging markets in Southeast Asia, in South Asia, in Africa, in Latin are very few. And even fewer are those who are doing it at scale. TransFi is one of those very few. In fact, I would submit that we need more players to solve all the problems in all the hundreds of countries in emerging markets where transaction times are too long. Transactions, even if transaction times are known to be too long, are unpredictable. The costs are too high. Onboarding issues are major. And multiple issues need to be solved for individuals, for businesses which are transacting and want to receive money or to send money. So I would actually argue the other way around. I think we're just at the starting paces of a long race, and you will see many more players come solving multiple issues which exist, especially into emerging markets.
Well, walk me through some of these issues, right? Because like a naive perspective would be, stablecoin solved everything already, right? Like if I want to send money to Southeast Asia, to India, for example, I can just send my USDC there, and then someone there can just sell it locally in their crypto exchange, deposit to their bank account, and then it's done. It's solved. That's a naive approach of looking at things. What is it missing?
Yeah, because there is somebody, the assumption is that there is somebody who will do that payout in the last mile. And when that somebody is doing it, that somebody will be able to do it efficiently at low costs, will be able to transact big volumes. And that somebody does not exist today. See, on-chain transactions are very easy. I have no debate on that, right? So if the entire world was operating in US dollar stablecoins, USDC, USDT, and everything was paid for or received for in that, then the problem is solved. But that's not what the reality is. The reality is that we are dealing with only optimization of the on-chain leg of the payment story. The on-chain leg has to synchronize with the off-chain leg, which is the fiat part where payouts are happening. So for example, if you're doing remittances, you want to send money to your family. Let's say you are a Filipino in the US who wants to send money to his mom, right? And stablecoins make it faster, more predictable, cheaper. How will the money movement happen? Money movement has to happen that, dollars come via ACH or Fed wire, get converted to stable coins. They are then off-ramped in that country, converted to Filipino peso. Via bank, they get paid out into the account of the mother of the sender. All of these steps have to happen synchronously in the shortest possible time and have to be delivered at one go. It is not good enough for everybody to do discovery themselves. This person can say, okay, I will basically send stablecoin to somebody in Philippines. That somebody in Philippines has to find the right partner to convert that to Filipino peso and get at the right price. Those things just are not there and just are not easy enough. It's easy enough to say it, but what's really important is to be able to deliver it in a seamless solution end to end, and not just for individuals, for businesses, for payroll processing, for freelancer payments, all kinds of use cases, for any kind of e-commerce payments. All of those use cases have to be solved for and delivered end to end. And while doing all of this, you have to ensure that the solution is compliant, because if it is not compliant, you will be subjected to multiple checks and issues which will emerge because of the emerging regulatory framework. So that's what I would say, right? If the sender's money, if the sender's mom who's in the Philippines was able to just receive USDC or USDT and use that to buy grocery in a store, then there is no issue. But that is not the world we live in.
I mean, I think, maybe buying groceries is relatively simple because they could well, at least on paper, receive money into a crypto wallet that has a debit card attached to it. Crypto cards are doing really fast growth, phenomenal volume. So in theory, they could spend it in a grocery store if they accept Visa or MasterCard. And even if you can pay for groceries, maybe you cannot pay for rent, which you need to transfer, etc., etc. Walk me through a little bit more the sort of problems that you face in this example of sending money from the US to the Philippines. Who are the different players at different points of the transaction, and what are the problems that you help solve in particular in this transaction?
Yeah. So look, I think, when you are sending money from US to Philippines, there is a recipient bank which is receiving money from the sender's card or bank account and receiving it by FedWire or ACH, right? So there's a receiving bank, right? That receiving bank then is from that receiving bank, money is being sent to a Circle bank account from where minting is done, and that converts to USDC. That's step 2. USDC most likely will find it tough to be off-ramped in the Philippines because the cost of doing USDC off-ramp in Philippines would be higher. So you would convert that USDC on-chain to USDT, and you need to do that. It goes into the USDT, then goes to a licensed virtual assets converting partner, which converts USDT to Filipino peso and sends it to a bank. And from that bank, a payment is made either into the GCash account of the mother of the sender or the bank account of the recipient. All of these steps have to happen, right? First of all of these steps have to happen in a very short time frame and needs to be done literally one step after another in an integrated solution, because otherwise each of these steps can take time and cause friction. So that's problem number 1. Problem number 2 is that when you're doing it, it's easy to do it for small volumes. When you do big volumes and when you are converting a large amount of USDT or USDC into Filipino pesos, the markets there are not that liquid. Liquidity is very good in USD to USDC or USD to USDT in the G3 currencies, dollar, euro, and GBP into stablecoins. When you begin to go into currencies outside of G, especially in the currencies in emerging markets, liquidity begins to dry up. So how do you shore up liquidity is very important. How do you do local netting to be able to do big volume payouts begins to become very important. And how do you do this end to end in the most cost effective way? Because you need to ensure that not only are you solving for speed and predictability of transactions, but you're also not charging 4%, 5%, 6%, which the traditional world does when this money transfer is happening. You really have to make it far more affordable to people, because that's when the big issue of cost also gets solved. So all of these issues are being solved when a company like TransFi comes and begins to address the problem with a stablecoin integrated stack, which is using stablecoin for on-chain transfers, but also integrating with the fiat leg in every corridor and delivering it as an end-to-end solution with one click from the sender, which sends money back to his or her mother in the Philippines.
Okay, but like, help me understand, because your I saw your release. It says, okay, you guys operate in over 70 countries. How do you plug in every single local partner into this network, right? Because for every single transaction, whether it's B2C, B2B, different sizes, different Filipino banks, etc., you end up with basically this mosaic of different solutions that you need to integrate. How do you start thinking about which corridors or which problems to solve? What's your approach here?
Yeah. So look, I think this is a complicated problem to solve, right? And the way to solve is by obviously ensuring that you have integration with the right set of partners across each of the corridors that are important to you. The corridors that are very important to us are in Asia, in Southeast Asia, China, Australia, in South Asia, which are one of the biggest receive corridors in the world. We do Africa, which is again linked to some of the flows that we see. Selection of geographies is always a function of where you are seeing flows and volumes happening. But you do have to integrate, right? You have to integrate with banks. You have to integrate with any kind of partners who are converting stable coins to fiat. And you do those integrations into your stack. TransFi has done 120 such integrations over the last 3 years with partners literally in every country. And we work with some of the best partners in every country because we try and do big volumes at the lowest cost in the most stable and predictable setup that exists for money transfer cross-border. It is a process which requires plumbing the right rails, and we do, and we already have built that. And on the back of that plumbing that we have done, are able to deliver solutions. So you said 70 countries. I just gave you the example of Philippines. The reality is that if TransFi connects to any customer, let's say TransFi was to connect to a payroll processing company or a remittances company, they could use TransFi to do payouts into Philippines, into Indonesia, into Malaysia, into India, Pakistan, Bangladesh, into Nigeria, Ghana, all of these countries with just one integration. They don't need to integrate with every partner. They don't need to find out a stablecoin wallet in every country, how to off-ramp in every country, just one integration. And TransFi is able to give all those countries to you with an end-to-end solution, which delivers value in a predictable, instant manner at the lowest cost possible.
So your goal is to primarily help all of these businesses help the end user actually receive fast and convenient and cheap payouts, right? So you want to, so what you're saying is, if I understand correctly, is okay, there's solutions for like this corridor or that corridor, you can do this, you can do that. But where your advantage comes is that you have a wider array of potential last mile payout solutions, partnerships across the whole world, so that ideally whoever your customer is doesn't have to integrate you and another payment provider and someone else for all the countries that they service, but ideally they can just plug and play with you and they can solve all of their payout needs.
Correct. Yeah. So essentially, what are stablecoins? Stablecoins enable instant settlements. So they make transactions faster. If you integrate them with the fiat stack in the most secure and predictable manner, you are able to do this across fiat and stablecoin. So we do make transactions faster and more predictable. I'm using both of those words because it's one thing to say you will receive money T+2 and realize it doesn't come for 4 days. And maybe on the 5th day, you get a message from your bank saying that the one correspondent rejected the transaction and therefore it cannot be delivered with no further explanations. So both speed and predictability are very important in terms, so we solve for that. We solve for the cost of transactions, right? Because essentially, if you're transferring money for individuals and for businesses in many markets, if you're transferring it to India, it could cost you between 1.5% to 2%. If you're transferring it to Philippines, it could cost you maybe 3 to 4%. If you're transferring to some other countries, it might be more, right? So you reduce the cost of those transactions and you make the process simpler and easier for both the sender and recipient to deal with, because your standards of onboarding, your standards and processes for onboarding, your standards and processes for doing business are much more tech-led, much simpler in terms of how they operate. So you solve for all of these things, and essentially what you're solving for is the pain of sending money or receiving money if you're sitting in emerging markets. You're solving for somebody who is a small website development agency or a small tech shop in Asia who's serving customers in the US and Europe, and today if they use PayPal, they could be charged 8 to 12%. And it might take them more than 1 day, maybe 2 days to receive money. You're making life better for all of those people. And that's essentially what TransFi's mission is.
What is, because like this idea of a stablecoin sandwich has existed for a while, right? Like the idea that it's like, okay, I have local on-ramp, stablecoins to go international, cross-border, and then like local off-ramp. Like this idea has existed for a while, and yet stablecoins continue to grow and grow and grow. What is it that has changed? Is it the fact that it's plugged into more and more integrations, and all of a sudden it's becoming easier and easier to finish these end legs? Is that the case?
Yeah, so what's changed is just the acceptability of the end users. What's changed is the openness in the traditional financial infrastructure to plug in with a stablecoin provider. What has changed is essentially players like TransFi coming and solving end-to-end issues with technology, with all the solutions that we provide. I think that is what is changing, right? Customer acceptance, institutional readiness to partner, and players like TransFi coming and providing end-to-end solutions which make a difference. I think all of these three are making the difference. That's what is changing. I think the overall view where there is greater acceptance of stable coins because there is more regulatory clarity which is emerging, because there is more and more conversation happening on stable coins is obviously adding trust to the entire ecosystem. But it's essentially end user acceptance, institutional openness to partner, and dedicated solution providers which are moving the goalpost in terms terms of volumes which are transferred on stablecoins. By the way, I gave you the example of stablecoin sandwich, right? And that is one use case, but there is other use cases, right? Because there is a lot of places where people want to receive money in stablecoins for payroll or for freelancer payouts. We do those processing as well, right? There are use cases where on e-commerce stores, right, end users want to pay in stablecoins and we settle with merchants, right? All of those use cases also do exist, right? And they are also becoming increasingly big in terms of volumes that we do and transact, because all the flows are not just fiat to fiat on a stable sandwich. We do significant flows which are either fiat to stables or stables to fiat, because stables themselves are coming into use for different kinds of use cases, whether it's payroll which wants to be received, whether it's end user on an e-commerce platform who wants to pay in stables, etc.
Yeah, I mean, I think that's part of the, that is definitely part of the sandwich, in that your people often not want to spend the stable coins that they have. They don't necessarily want to convert it into fiat, especially if you're in a country where there's capital controls, or where, just moving in and out of the country.
Fluctuates.
Yeah, exactly. The currency fluctuates, et cetera. Like, you might want to hold on to the stablecoin. Tell me a little bit more about your customers, the people you serve. We've mentioned businesses, remittances. Can you bring it to life a little bit, like in terms of what is some example, someone that is using your services for whom you're solving a problem that before they had no good solution to?
Yeah. So I think our biggest customers are in the remittances space. So for example, there is a remittance player. They're known as exchange houses in the Middle East, which does billions of dollars of transactions where they're doing payouts from the Middle East into South Asia, into Southeast Asia, into Africa for individuals and for SMEs. And we are moving, some of their volumes on stablecoins where they're sending a local fiat, could be UAE dirhams, to us. And we are doing payouts in markets in Southeast Asia, in Indonesia, in Vietnam, in Philippines, in Pakistan, Bangladesh, etc. And we're doing it at much better costs, at faster speed, and making it better for their end users, right? This is a real life customer that we are serving. And this is one of the 250 such exchange houses that exist in the Middle East, which are all open to such solutions. So I think that's kind of one example that I can quote, right? There's another example where there is a pretty large payroll processing company, global payroll processing company, which wants to pay out to their employees and freelancers across the world. And we serve them for doing processing of payrolls. They fund us in USDT, and we are doing payroll processing for them in local currency and in US dollar from markets in Asia to Africa to LATAM, across the world, including in Europe and UK. And at one go, we make those transfers happen, right? So these are some of the examples of use cases which we're doing where essentially we're doing cross-border payments with stable coins as the rails on which transactions are happening.
What are some of the difficulties with dealing with so many different jurisdictions, so many different countries, so many different payment networks? What are some of the difficulties in tying them all together?
I think the biggest question is always liquidity, right? Conversion of stable coins into a particular fiat, which is not a G3 currency. That's where the biggest friction is. That's where bid-ask spreads can be very high, and the costs of transactions can skyrocket if you do not have the right way of doing it. And I think that's the biggest problem in the chain. And that's the biggest puzzle to be solved as we go forward. We solve it by trying and doing as much netting as we can in the corridors that are important to us.
Cool. And I mean, obviously, this is something that improves with scale. The more customers you have, the more netting you can do, the faster and the cheaper you can operate. What is a misconception that a lot of your partners still have, or potential customers still have? Like, what is something that a lot of people get wrong about the cross-border stablecoin payments world?
I think I'm not sure if people get it wrong, but I think the understanding that the issue is in conversion, and that's where our economics can get dramatically killed, is not fully appreciated unless you begin to do serious volumes. It's one thing to do $10,000 of volumes in a particular corridor. It's a totally different thing to do $10 million of volumes in a corridor, or tens of millions, which we do today. And I'm sure when we get to doing billions of dollars of volumes in a corridor, we will have to scale and solve for a very different set of problems, right? And I think that is underestimated. I'm not sure if it's a misconception, but that is seriously underestimated when you talk about stablecoins. If you don't solve for this, it's a nice story and everybody will quote on-chain transaction numbers, which are good, but they don't solve real-world issues for people.
Yeah, so it's a question of skill, right? Because then your flows are predominantly one-sided, right? Like if you're mostly working with remittance companies, there's people sending money from the UAE into Southeast Asia, into East Asia, and if there's no flow on the other way back from local currencies into USDT or USDC or whatever stablecoin, that becomes very, very hard for you to actually make these operations. I guess that's the difficulty, if I understood correctly.
Yeah, so it's something which is solvable, and as I said, we try and do as much netting as possible. We are still in the early days of solving the netting issue fully, but there are other sided flows as well. For example, there are many parts of the world which are receive corridors for us, where there is origination which happens for payouts into China. Mm-hmm. Right, because China ends up being a geography where a lot of transactions are, where there's a lot of manufacturing goods which are being provided and sold to these countries, right? And I think that's one example which I will give. So whether you are in Pakistan, you're in Bangladesh, you're in Southeast Asia, you're in Africa, you see a lot of origination which is happening in these countries which solve our payout paths for payouts into China, right? Then you will say, okay, what do you do in China? We'll come to what do we do in China in a minute. But there are various ways to think about originating the other side of flows. There are people who are doing transactions, who are in each of these markets, who want to do originations and payout in USD or in GBP or in other G3 currencies because their kids are studying abroad, because they're going for any kind of serious hospitalization or health-related issues, and they want to send money across, right? So there are definitely distinct use cases which exist, and using that to net off the transactions as we try and scale is a very important part of solving the liquidity issue.
Got it. Okay, and I had one more question. You mentioned China. What is it that you guys are doing in China? Because that's a tricky market, right?
So, I think we don't do much on mainland China, but in Hong Kong, for sure, we do transactions which are originating in many markets, which are our send corridors. And there are payouts happening in USD or HKD in Hong Kong, right? And then there is obviously a market which connects Hong Kong with mainland China. But that's where we operate. We don't do mainland China that big at this point in time, and echo the point which you said that it's a market which we still need to understand for us to do serious business mainland.
Okay, one last question I have is, if you're operating in 70 plus countries, this adds a ton of complexity, both on the technical side, because the pipes need to work, but also on the compliance side, right? So like in your company, like roughly like how many engineers do you have versus compliance professionals? Like what's kind of the ratio of the two?
Yeah. So look, we have far more engineers than compliance professionals, right? We are fundamentally a tech company. So 50% of the company is tech. By definition, that's the yardstick that we keep. I think the way to think about compliance in our minds is that you need compliance professionals which are in markets, wherever we operate and wherever we have licenses, because they are responsible for reporting to the regulators and bringing in local understanding. But the rest of it is very tech-led. Because when we are doing decisioning, we are using data-backed decisions built of AI models. If you are a company and I'm screening you, I'm using AI models which are profiling your 360-degree internet footprint and using that to score you. When I'm doing any kind of transaction monitoring on you, I'm again using a lot of fingerprint that you leave from your email to your IP to the way you're behaving to your on-chain profile to your off-chain profile, etc. Right? And all of that is very scalable if you are using the right technology. So there's a part which is core technology, which is built by a kernel of high-quality engineers under the guidance of compliance professionals. And then you have local compliance officers in every country for regulatory reporting and managing local complexities. So I think that's the way we think about it. By the way, I would actually make a claim that we have one of the most sophisticated compliance engines in our sector. And we really think of ourselves as a compliance savvy and compliance serious player. I won't say compliance first because it should always be customer first.
Got it. Okay. Raj, is there something we've missed? Is there something we haven't discussed so far that you want to highlight?
I think from our perspective, a lot of what we do is still very much small businesses, individuals, freelancers. There's a tremendous opportunity, which is in classical trade finance, where you're dealing with bill of lading and all kinds of inefficiencies which arise because of that. There's a lot of inefficiency which comes as you begin to look at any kind of short-term liquidity issues which exist when you're doing these transactions. And all of those also are areas where you will see players come in and deliver solutions. You'll see TransFi touch on some of these as we scale up further.
All right, Raj, thank you so much for your time. This has been a great conversation.
Super. Thanks